Welcome to Nasdaq Trade Talks. I'm your host, Lyanne Alfaro, and today we are delivering the daily insight on the Nasdaq-100 index, or the NDX, which is made out of the 100 largest domestic, international, non-financial companies listed right here on the Nasdaq. Now, the NDX has been the barometer for U.S. large cap growth and also one of the best performing indices over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me today is Ryan McCormack. He's QQQ equity ETF strategist over at Invesco. He's going to tell us a little bit more about the trends in the Nasdaq-100 today. Thanks so much for joining us.
Thanks for having me.
Thanks, Ryan. And let's kick it right off. Why don't you tell us about the QQQ versus the S&P 500 index and what we're looking at today?
Yep. So as we're looking at last week, it was another week of QQQ outperformance, up 2.85% versus the S&P 500 up 1.63%, good for 123 basis points of outperformance. Kind of continuing our year-to-date trend where QQQ is up 34.91% versus the S&P up 7.93, which is good for nearly 27 percentage points of outperformance. And as we look at performance today, it's continuing that trend. QQQ being led by Netflix around some optimism and positive analyst commentary, up nearly 11% before we jumped on, along with Facebook, which added a new shopping section called Facebook Shop. And that stock is up over 7%. And so those 21st century industrials continuing the trend today that we've seen over the past week and year to date.
Moving right along, looking at the last week, what can you tell us about the weekly sector returns for the QQQ versus the SPY?
Yeah, so it's kind of a continuation of what we've seen again for the year and weeks past. QQQ's three largest overweight sectors are the ones that were the largest contributors to its relative outperformance. You had technology up 4% relative to the S&P at 3.88. You had consumer discretionary at 2.81 versus the S&P's 1.58% performance, and communication services up 2.77%. Versus just under 2.6% for the S&P 500. So again, the overweight sectors, yes, the weighting has certainly helped, but as we're diving into individual performance, the sectors are outperforming their S&P counterparts.
And lastly, what can you tell us about the largest contributors to the QQQ versus the S&P 500?
Yeah, so you look at Apple, of course, fresh off becoming the U.S.'s first $2 trillion company, up 8% on the week. Some positive news: it was allowed to continue to do business with the WeChat Messenger app in China. And then, of course, we've sort of had a couple of weeks of optimism surrounding its new iPhone launch, which is pushed out a few weeks, probably in early October. And then again, next week, it's expected stock split. You see Tesla on there also ahead of its stock split next week. But I think it's interesting if you look, you see Tesla and JD.com both in there in the top 5 contributors to QQQ. The S&P 500 does not hold either Tesla yet or JD.com. So beyond just the great performance that we've seen from these 21st century industrials, it's the differentiated holdings profile of QQQ that continues to drive performance and deliver value to the shareholder.
All right. Well, Ryan, thank you so much for joining us on this episode of Trade Talks, and we'll have you back on very soon.
Thanks very much.
And Nasdaq Trade Talks followers, thank you for joining us on this episode. Please stay tuned as we bring you more coverage right here from the Nasdaq.